Welcome to today's edition of the 600 Seconds of Trading. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. Today we're using a new setup. You can see me live, and I'm going to try this out for a few days and see how this goes. We're going to, as we always do at this time of the day, take a look at the markets, see what's going on with markets such as Bitcoin, Euro, Dollar, but also crude oil, gold prices as well. And before we start, as always, please bear in mind that trading financial markets unfortunately is risky, and there's a general risk that we'll lose all of our invested money. Okay, so let's begin, and we're going to begin by taking a look at the charts. And this is Euro Dollar chart. You're looking at a 4-hour, and the market has moved a little bit to the upside yesterday, and unfortunately it sort of failed to touch that sell zone I discussed. That sell zone started at 116.87 and sort of extends all the way up to pretty much 118, with initial stop loss orders just above 118.53, which is also the ECB high. If we take out that high, most likely the sentiment in the market will change, and we'll see a bit more of euro dollar gains, and euro up and dollar lower, right? Anyway, we're still sort of capped, and I think if we do swing to the upside, then most likely traders will sell. However, though, my preference is to sell on a break to the June low. Okay, so trade below 115.05 or 115-ish down here at the June low, and I think that could relatively easy open up further declines, potentially down to the July 2017 low, and that's a good opportunity as well. If you take a look now at the daily chart, as you can see, if we take out that triple bottom here, then the market could relatively straightforward potentially reach the July 2017 low, but the next sort of major low is actually the June 9 low of 2017. Here is Bitcoin, and Bitcoin is sort of struggling to build on its gains that it acquired over the last few days. It's still capped by this high, and if you look at it from a daily perspective, it's clearly that we're still in a downtrend. However, we're starting to see signs, not necessarily in Bitcoin, but in other markets, which I showed you just a few days ago, in markets maybe like Ripple, EOS, and other sort of smaller coins like IOTA, that we're starting to see potentially the beginning of a reversal. But for now, in Bitcoin, the trend remains bearish, and if the market moves down to maybe today down to 6,300 and maybe in the next few days to 5,800, then that would not surprise me at all. However, though, if we take out that trend defining level, then it potentially can cause the market to trade to the upside. If you look at this, it looks a little bit like a head and shoulders even, with this being at the head, left shoulder, and then you have the right shoulder to potentially being created in the next few sessions. Here's gold. And gold had a very nice run. So remember, we're targeting that December 2017 low, and we reached that level. We talked about selling here and the last here and here. And the last idea was to sell here. And now the market moved to the upside, because I like to stick with the trend until proven otherwise. And it looks now that we could potentially be starting to work with the end of the bearish trend. Now, we did not take out 1262, so I'm going to remain bearish for now. And I wouldn't surprise me if we go down maybe to 1248, maybe 1245, but then we'll see what happens here. Because this December low is important. And obviously, if we take that out, we could potentially decline down to the May 2017 low at 1215. But in the big picture, especially if I show you something like a weekly chart, some people suspect that this market is building some sort of head and shoulders, this being the left shoulder, this being the head, this sort of being a complex left, and this being some sort of complex right. And technically, this big picture uptrend will remain in place, as long as we continue to trade above that December low. But if we take out that December low, then probably further declines, which can become an issue. But and that key point there is interesting, because longer term traders are saying, well, if we see stabilization here, then they would like to rebuild a long position around these levels and then target maybe 1,300. Personally, I think it's a little bit premature to think about that because we're still dealing with a downtrend, but it's something to keep an eye on. Also, I mean, if we just look at macro fundamentals, the Fed, it will just continue to increase interest rates, not sort of stop increasing them. So most likely, I think that the long-term macro fundamental outlook remains bearish. Here is the price of crude oil, and the crude oil is bullish above 67.70, and is sort of lingering around 75.25. And it's a bit of a difficult situation for the market here to sort of buy at these highs. I did show you a short-term setup yesterday, and I also explained the problems with trading short-term, and the problem was here that the market actually traded lower just to bounce to the upside. I think, sometimes you miss out on opportunities, and here's something we missed out. Everything went really quickly. We got stopped out at the right place, and when we got stopped out, the market went bullish. And that's how you know if you put a right stop loss. You put the stop loss, and then if that gets triggered, you see a strong move. We saw that in this market, so we did that right at least. But getting involved here afterwards has been difficult. So what can I say? We'll keep an eye on 67.70, and if we go a little bit lower, maybe to 71, 70 in the next few days, and that could be interesting to potentially buy. The alternative is that the market just trades sideways, and then we have a bullish breakout above this yearly high. German DAX, that's a tricky one. As you know, I've been warning you about it for quite some time, and it's just chopping, very choppy. And if you look at it from a daily perspective, it's fully understandable to understand why nothing is actually happening here. Well, we're trading in a sideways market, and as traders, in my case, I usually trend following system, so I don't touch these markets. When you start trading these markets, you go with the idea that you're trading with a trending market, and then you get stopped out 2-3 times, or you get the analysis wrong, and then you sort of realize that, hey, we're trading sideways. And from on there, we need to take a decision. Want to continue to trade that with a trend following system and lose money, or do you just want to ignore the market? So this has been something that's been on my ignore market for quite some time, and it will continue to be on that list because we're still sort of trading within this big range. And I think what people are focusing on, if they want to get involved, is potentially to buy at the lower levels here, if possible, maybe at 12,000 with stop loss, or at 11,700. And that, guys, concludes the main presentation. Let me just see here if we have any questions. So we have a good morning. Good morning, Assam. Thank you so much for joining us. And good morning, everybody else. If you are watching this presentation, don't forget to hit the like button. We're using this new format today. We'll see how that works out. I'm not sure. Maybe it's lagging. Maybe it is. Maybe it's not. But don't forget to hit that like button. Much appreciated. Okay, it looks like I don't have any more questions, so we're going to wrap things up. I'll be back here tomorrow at 9 a.m. London time at the live trading room here at tradecaptain.com. Have a great day. Thank you.